Stocks, bonds, ETFs, straight out of downtown Chicago. This is Zacks Market Edge.
Welcome to Zacks Market Edge, the podcast about investing in your life. I'm your host, Tracy Reinick, and this week I'm going solo to try to find the best growth stocks that are out there. Growth stocks that are on the move, that have some momentum. There are some out there, but I had no idea what they were because, as most of you know, I am the value stock strategist here at Zacks. But value is having its own issues. So I felt like I want to see what's happening on the growth side. There's got to be something good over there. I know the semiconductors have been on the move, but what else has been? Also, I thought it might show us or give some light into what is hot right now, what has the high Zacks ranked, what has the good growth scores, what is in the top 50% of Zacks ranked industries, and it's on the move higher, not lower, but higher. These are kind of difficult things to all have, at the same time, really, because remember, the Zacks rank the number one or number twos, which are the strong buys and the buys. So those are the very best of the Zacks rank. Those stocks, in order to get that, you have to have the analysts raising earnings estimates. And most analysts are cutting them on many, many companies right now. The overall S&P 500 earnings are expected to decline this year, and they're expected to be lower here in the first quarter. So there's been a lot of estimate cuts. Then we had the banking crisis. So even the banks have been cut pretty dramatically recently. And so where is it that somebody is either raising or things are still looking kind of good on the growth side of the story? So that's why I decided to do one of the screens, and it is called the top ranked growth stocks that are on the move. I like the idea of on the move, which is moving higher, not lower here in 2023, because there's still a lot of areas that are struggling, but these stocks are not, because this screen looks for price changes in 1 week, 4 weeks, and then 12 weeks. So that's 3 months. I went a little bit further. I just did year to date when I was looking at some of these stocks that the screen returned. I also looked at 1 year out just to kind of see where it's come from. And then the last month, which the screen actually also looks at, that's the 4 weeks, obviously. And again, the screen also gives you Zacks number ones or twos. That's the top ranks, but growth scores, the Zacks style score of A or B, those are the top growth scores. It is looking for the top 50% of Zacks ranked industries. That's got to give something bullish, because that means the analysts are raising or doing something good in that industry. It did look for stocks above $5, so we're not going to get any of these like super dirt cheap, dollar stocks. So sorry. Maybe I'll do one of the podcasts on, stocks under $10 or something. I know many of you like those. So, and I haven't done one of those in a while. So I'm going to do one of those soon. But this one also looked for average volume over 100,000, because again, we don't want something that, isn't really traded very much, or, not many people, if anyone, is aware of. So we didn't want to get any average volumes of like 10,000 shares or something like that. So combining all of these things in one screen, we got 6 matches. That's it. That's pretty exclusive club, I feel, for the top ranked the growth stocks that are on the move, because, as I mentioned just a minute ago, that's a very difficult category. I did not know how much there would be, because you got to have those analysts looking for something positive, and there's not a lot of positive things going on out there in the earnings estimates area. And then you had to have the stock on the move. The street also had to be buying in, the traders, stock traders had to be in these. So what are these? They're all in different industries. So that's also intriguing. And they're all different market caps. And they weren't really what I thought I would find when I ran the screen. Even though I'm the value person, I still didn't think that these would be where the growth on the move was. But, it is what it is, right? And that's what makes using screens with the Zacks rank and the Zacks style scores kind of unique and interesting because it does sometimes reveal some hidden companies that maybe you're not really focused on. These are the ones that are not talked about on Fox Business or CNBC, or they're not even really followed much on like stock twits or the Reddit boards. Like there's certainly no Reddit groups. The apes aren't in these, so these are more like hidden gems, really, on the growth side with the good Zacks rank. And the Zacks rank can really unveil, these types of companies, these hidden gems where the analysts are more bullish. So that's why I like to use the Zacks rank. I feel like it's a great tool in this uh, kind of earnings market that we have right now in this stage of an earnings cycle where things are more bearish and there's more cuts going on than increases. So where you can find those increases is a key area to be looking if you're looking for some new stocks to keep on your watch list. So what are these 6 companies? I'm going to talk about all 6 of them because, again, they are all fairly intriguing. So first one out the gate is on the tech side, and it's ASUR Software. And that ticker is A as in Adam, S as in Sam, U as in universe, R as in Robert. ASUR, and ASUR is ASURE. ASURE Software. And what they do, they are HR consulting and payroll and HR solutions for small businesses. They themselves have a small cap market cap of just 316 million, which is why maybe, you might not have heard of them because they are on the small cap side. They are in the internet delivery services industry. That is a top 5 industry right now on Zacks, and it ranks 12 out of 251 industries. So this one in the screen is really picking up that really good industry rank. It's beat 4 quarters in a row, so we got to like that. And I did look at the PE because I can't help myself. I am the value investor after all, even though it doesn't matter for the screen. But the PE is at 44, just so you know. But I know growth investors don't care. PEG, though, you might want to care about that, but it's at 1.8. It's not too terrible. It's not cheap, but it's not too terrible. So I like that. Year to date, these shares are up 67%. 1 year, they're up 139.2%. So you can see this stock is on the move. It does have the good momentum. Now, I did take a look at those earnings, and it's expected to be up 133% here in 2023 to 35 cents from 15 cents last year. It is the number 1 rank, and the analysts are pretty bullish on this one, as is the street, obviously, with it up 67% year to date. So that's the first stock. It's on the tech side, ASUR Software, ASUR. The second company is called Solo Brands, and the ticker there is D as in David, T as in Tom, C, DTC. They're also a number 1 rank, and they are a lifestyle branding company. So what does that mean? They make the Solo stove, which is like an outdoor stove, the ORLY kayak. They have Chubbies, which are men's swim shorts, and they make the Isle, ISLE, which are paddle boards, affordable paddle boards. So you can kind of see the vibe that they have. If you go to their website, it's pretty obvious, but lifestyle and adventure brands. And this one's actually cheap, PE of just 8.6 and a PEG of 0.5. So I'm liking all that. Now, this is a small cap too, market cap of 791 million. They've also beat 4 quarters in a row. So great track record. I said they were number 1. They actually have a B growth score. And then I took a look at their estimates. They are expected to be down for fiscal 2023, 96 cents versus 107 the prior year. That's down 10.3%. And then 2024, $1.17 which is up 22.4%. And I know what you're thinking, like, well, how could this make this kind of screen if the growth is actually, declining in fiscal 2023? Well, the estimates have been cut in the recent just week. And so you are seeing a little bit of a decline in those estimates, but they were up earlier, if that makes any sense. So recently, the analysts have been maybe getting a little more cautious, but then looking out to fiscal 2024, it's looking better. So this is a type of company on the consumer product side. You're really going to have to wait and just see what they report. They were expected just 2 months ago to make 88 cents for this year, and now they're at 96 cents. That's where they're getting the number one rank. So the analysts were not that bullish just 2 months ago, but in the last week, maybe they're getting a little more nervous given what's happening with the consumer, and the consumer is starting to pull back just a little bit. So anyone owning any of these consumer brands, any kind of apparel, these kind of lifestyle items, shoes, beauty, like basically anything on the consumer side, you're really going to have to pay attention and see what happens over the next 6 to 12 months, basically, with the consumer. And it's going to go all over the place, including these estimates. But for now, Solo Brands is a number one, and it is pretty cheap. As I mentioned, it's got that peg of 0.5. Now, what's it doing over the year? The shares are up 14.6%, but most of that has just come year to date, where it's up 120%. So this one was probably kind of left for dead, and then this year's got a nice pop and is up big. Over the last month, up 49%. So people still believing in Solo Brands, and it is on the move. Do I have the industry rank? I do. Industry is 87th out of 251. That puts it in the top 35%. So that's Solo Brands, ticker DTC. And the third stock on our list is also interesting because this is one I wasn't really surprised to see on it. And everybody knows it. Hilton Worldwide, ticker HLT. Yes, the hotel chain. They are a Zacks number 2. That's the buy right now with a B growth. They have a PE of 24.8, but the PEG ratio is just 0.7. So a PEG under 1 indicates value along with growth. That's a rare combination. So they have both categories here with Hilton Worldwide. Market cap, $37.5 billion. So it is the big cap, as you might assume. But really looking at those earnings estimates, it's looking just really good for these hotel chains, especially this one, Hilton, up 16.4% in 2023 to $5.69 from $4.89 last year. The estimates are mostly up here for 2023, so analysts are bullish. What is the stock doing? Over the last year, it's down 2.2%. So, not doing much in the last year, but year to date up 12.6, and that is outperforming the S&P 500 by quite a bit. Over the last month, it's up, but just 1.3%. So it is on the move, but just not as dramatically as, Solo Brands or ASUR is. Hilton also pays a dividend. It's yielding just 0.4%, however. Did I say the industry rank? No, I did not. It's 34th out of 251, and that's the top 14%. Nobody should be surprised that these travel names and the travel industries like hotels are among the top on the industry rank because the earnings estimates are on the rise still for that group. Anything with travel and leisure, still the outlook is good for 2023. So that's Hilton Worldwide, HLT. Number 4 stock is intriguing. I used to own it maybe 10 years ago, 15 years ago, maybe even. Now I'm kind of lamenting. Why didn't I still hold on to that? I'm not sure why I didn't, but it is Coca-Cola, but FEMSA, Coca-Cola FEMSA, and FEMSA, FEMSA. And the ticker is K as in Katie, KOF as in Frank, KOF. And it's the largest Coca-Cola franchise bottler in the world by sales volume. It's headquartered in Mexico City. It specializes and does business in Latin America. Over 2022, it saw double-digit volume growth in Brazil, Colombia, Argentina, and Guatemala, and solid growth overall. I think it was 8.6% for the year, and all regions saw some solid growth. So that was a good quarter or a good year for Coca-Cola FEMSA. Analysts see another solid year for 2023 with earnings expected to be up 7.7% to $4.86 from $4.51 last year. And it is a Zacks number one rank. It's got the strong buy. The growth score is a B. This is in the beverage soft drinks area. That's a top industry as well. It's 48th out of 251, which puts it in the top 19%. Everybody's been buying these kind of drink companies, even regular Coca-Cola, Pepsi, Dr. Pepper, Snapple, and now Coca-Cola FEMSA, because we're still buying it. All the companies are saying, even though they've been raising the prices to cover the inflationary pressures, they are still getting the volumes as Coca-Cola FEMSA did last year. So it has beat 4 in a row now. And the PE isn't bad. It's at 17. It has a PEG ratio of 1.4. And as I said, it's going to grow those earnings, or is expected to, 7.7% here in 2023. It has a market cap of just 706 million. I'm kind of surprised it was that small. I was expecting it to be a couple billion, but 706 million. So I'm liking it as a small cap. And it pays a dividend yield, which it has always been shareholder friendly. That's probably why I bought it 15 years ago, I want to say, because I did like the dividend it was paying even back then. And it's yielding 3% right now. So what have these shares been doing? They've got to be on the move, right? Year to date, up 23.6%. So that's pretty nice year to date. Over the last year, up 51.7%, as investors have been piling into these beverage company stocks. Over the last month, also very bullish, up 10.3%. So that's Coca-Cola FEMSA, ticker KOF. Stock number 5 is in online education. It's Grand Canyon Education, ticker L as in Larry, O, P as in Paul, E as in Edward, Lope, LOPE is the ticker. They are a mid cap with a market cap of 3.6 billion. They do the online education in business, healthcare, those kinds of degrees, both undergrad and graduate. It's a Zacks number 2. It's got the A growth score, PE of about 18, and a PEG of 1.2. So those earnings expected to be up 7.2% here in 2023 to 639 from 596. It only has one estimate on it, though. So be careful on some of these that don't have a lot of analyst coverage. Actually, that's also true of Coca-Cola FEMSA. I think we have 2 estimates on that one. It's a foreign company, so there's just less coverage on those. But this one, Grand Canyon Education, we only have one estimate on it as well. It's beat 4 quarters in a row now. Industry rank is 95th out of 251, which puts it in the 38th%. So definitely top 50 there. And what has the stock been doing? Year to date, it's up 9.9%. Over the last year, it's up 15.3%. And the last month, it's up 7%. So if you're looking for online education and you're looking for that growth stock, this is one to maybe keep on your watch list. And listen in on the next earnings call to find out what's going on with these online education companies. That is Grand Canyon Education, LOPE. Okay, our last stock is one many of us have heard. We've heard the jingles on television. Yes, their commercials work on me. It is O'Reilly Automotive, ticker O. R as in Robert, L as in Larry, Y, ORLY. And it's the Zacks number 2. That's the buy. It's got a B growth score. This is a big cap, market cap of 54 billion. No dividend. I'm kind of surprised by that, but no dividend. I did not look to see if they're doing share buyback or something else. So you might want to investigate further if you're interested in if they are shareholder friendly. PE is 23.7. A PEG ratio is 1.8. But earnings expected to be up here, of course, in 2023, up 9.5% to $36.62 versus $33.44 they made last year. Now, O'Reilly Automotive is on the car parts side of the auto area. Their industry is auto retail parts. And the parts area is very hot right now. Cars are expensive. People are holding onto their cars for even longer and longer. But when you do hold your car 10 years or 15 years, as some of us have done, including myself, things start to break down. It's just natural, especially if you live in the north, like some of us, where we get, extreme weather conditions. You get a lot of things that rust out or just need to be replaced, and everything needs to be replaced at some point on most cars. So O'Reilly's cashing in on that demand for the auto parts right now, and the analysts are pretty bullish. Where does it rank? It's at 34 out of 251. That is the top 14%. And it's beat 2 quarters in a row now. It is having earnings coming up here on April 26th. So tune in then to see how good things are on the auto parts side. But I have a feeling it's going to continue to be pretty solid here, given that the average age I think I saw of a car in the United States now is 11 years. It was either 11 or 12 years. So again, things start to break down. You're going to need a fuel pump replaced. You're going to need some stuff done. And O'Reilly is going to be there to cash in. So what has the stock done? Year to date, it's up, but just 3.5%. But over the last month, it has rallied a bit, up 6.5%. And then over the last year, it's up 18.6%. So not too shabby at a time when the S&P 500 has been struggling during that same time period. So that's O'Reilly Automotive, ticker ORLY. And as you can see, just from these 6 stocks, they're all in different areas. It is really kind of intriguing, right? That the screen isn't really showing us, that one area, one industry is red hot and the others are not. It's giving us the growth stocks that are on the move, but from various different areas. And I feel like that's a positive here for this market, because we're not seeing all the growth and all the good Zacks rank and being on the move in just one industry or, one or two kind of hottish type of areas, and everything else is kind of, not good. No, we're seeing a lot of these in various names, and that, I'm liking going into this earnings season. So keep that in mind. Keep some of these on your watch list if you're looking for those growth stocks. They are on the move. They do have momentum. As one of my colleagues always says about these types of stocks, momentum breeds more momentum, right? They are going to have earnings coming up, so that could be a catalyst, either up or down. So keep that in mind. Might want to tune in and see what's going on with actual earnings. So let me recap the stocks again, because there are some intriguing ones. The first one was ASUR Software, ASUR. Then we had Solo Brands. That ticker is D as in David, T as in Tom, C as in cat, DTC. Then we had Hilton Worldwide. It's still making all these lists. It's still a Zacks number 2 buy, HLT. Then we had Coca-Cola FEMSA. If you're looking for the emerging market type plays, which everybody kept saying was going to be in here in 2023, Coca-Cola FEMSA, headquartered in Mexico City, is one of them, ticker KOF. Then we had the online education, Grand Canyon Education, LOPE. And then we finished it up with our car repairs that we all hope we don't have to do. But if our car is older, it's probably inevitable. O'Reilly Automotive, ORLY is the ticker there. And as you can see, I'm still looking for great stocks to buy. It doesn't matter what market conditions are like out there. The Zacks rank can lead you in a good bullish direction if you're using it, if you're willing to look at the earnings, changes in the earnings estimates done by the analysts. They're not done by us here at Zacks. These are the street analysts, cutting or raising earnings estimates. And you can also, if you don't have access to the Zacks rank, you can go to Zacks.com and just tune in to our bull and bear of the day. Every day, we have a bull, which is a Zacks number 1 rank, strong buy. We have a bear stock, which is a Zacks number 5, strong sell, right on the homepage. Click on there, see what's going on with both of those every day. And here's a little hint about the bear of the day. I know not everybody wants to click on that because you're like, what do I care about that bear? No, I want the bull, right? But the bear of the days, surprisingly, are always kind of little sneaky in there. They always seem better than I always expect when I'm writing that article that, this bear, it's going to be real nasty and stuff. But many times I've found hidden gems in the bears because remember, the Zacks rank does change. It does move up and down and it can change daily. It's computer generated algorithm. And during earnings season, when the analysts are cutting or raising estimates, all the time, the Zacks rank changes quickly. So what is the Zacks number 5 strong sell may not be just weeks later or months later or even days later in some cases if they just reported earnings and something good has happened. So I always look at both the bull of the day and the bear of the day to get some ideas. Remember, the Zacks rank is that short-term recommendation because the earnings estimates are always changing. It's only recommended for 1 to 3 months. And again, it can change pretty quickly. Even the number 1 ranks can as well. But the 5s, I've seen those change pretty quickly on an earnings estimate. So keep that in mind and check out those number 5s as well, at least to keep a short list, an intriguing list kind of thing for what could change when they have their next earnings report. But be sure to do that and also subscribe to get all of the Zacks Market Edge podcasts. You can get us also on Zacks.com. Just click on the podcast link up at the top. We are on YouTube. We have our own podcast page on YouTube, Zacks Podcasts. Put that into YouTube search. You'll find all of our podcasts right there. I know a lot of people like to listen on YouTube as I do, so you can find us there. We're also on Apple Podcasts, and we're on SoundCloud. You can get us there, but we're on just about all the platforms. Get us somewhere, and I'll see you again next week with some more stocks.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.